and welcome to this week's look back at some of the stories that have impacted the markets in the last few days and may well continue to rumble on. The first thing we're going to look at today is the People's Bank of China, and they are looking to support the value of the yuan currency. Now, in the last 6 months, yuan has fallen about 10%. Back in March, we were looking around 6.31. Late August, that's around 6.92. So a 10% decrease in its value, but why? Well, the Fed's tough policy aimed at fighting inflation and strengthening the US dollar has clearly had an impact here, along with some disappointing economic data that we've been seeing coming out of China, particularly to do with the mortgage crisis and industrial production. And of course, we can't ignore the geopolitical tensions which are running with the US currently. Now, as we're approaching the 7.0 mark, Bloomberg states that the People's Bank of China is taking active steps to prevent further weakening of this currency. Now, it's fair to say they've done this in previous years, so it's not a massive surprise to anybody. And in fact, the charts show the rate is getting closer to the upper border of the AB channel, the line from which we would expect it will provide some sort of resistance. Worth keeping your eye on in the coming weeks. Certainly not unusual for the People's Bank of China to get involved. Now it's the turn to take a look at the UK markets. Now, some people saying that for the FTSE, things aren't quite as gloomy as it looks. And so close of trading last Friday, the FTSE 100 sat at 74.27.31. There's a view that that was firmly in the red with a 123-point downturn over the 5-day moving average. A lot of commentary, as I've spoken about before, is centered around inflation and the fact that activity in the US is having a negative effect on the UK economy. So it's certainly been a dip recently, but let's take a look at it over a slightly longer term view. Back in March, we're at 69.59, a transgression of the 7,000 mark, which we've been above since the middle of 2021. Now, the reduction in uncertainty since Brexit deal has actually been completed has lent some kudos to this 7,000 being a little bit of a bottom, maybe the potential for a push higher in the 7,000s due to more attraction for foreign direct investment now that the uncertainty has been taken away. Now, certainly volatility still abounds, and certain sectors such as the airline industry, for example, recently have had a really, really tough time, and that could be playing on the minds of investors and traders alike. But in this longer term view, is it actually as gloomy as the current mood would suggest? Again, an active market, the biggest blue chip stocks in the UK, great market to keep your eyes on. Now we turn our attention to the US. And whilst perhaps things aren't quite as gloomy for the FTSE as current mood suggests, the US stock market seems to have returned to a downtrend. Now, we had some figures out over the last few days, but importantly, we've had Fed conversations going on. Now, Jerome Powell mentioned inflation 45 times in his 8-minute speech the other night. Clearly something still playing on everybody's minds across the globe. We saw some positive news on Tuesday, with consumer sentiment actually led to a slight decline in stock prices, and oil companies suffered quite drastically amid falling oil prices. They were in fact down 5% on Tuesday. Now, the chart shows that S&P futures returned to the descending AB channel, and we saw some low volumes between August the 12th and the 16th, which could be interpreted as weakness in demand. Will these bearish dynamics continue with the AB channel? We're in September now, and historically, September is a worse month for stock markets. All of these factors could well be playing on investors' minds, could be causing this return to a downtrend we've seen. There's plenty of figures coming out over the next couple of weeks to keep our eyes on, and we really need to have a look at the longer term picture here and look at what the Fed's going to do in the coming months. Keep your eye on the US, as ever, major player. Well, returning back from the pond now, we're going to have a look at GBP. And is there a little bit of hope springing up this week for the Great British Pound? Wednesday morning saw a slight upward move to around the 116 mark. Now, unfortunately, we have been trading around the high 115s, mid to high 115s just today. We did see that large drop off last Friday, which we've not really recovered from. Nowhere near the 123 valuation at the start of August of this year. Certainly we're trading a lot lower than that, which doesn't bring great news. We've got this geopolitical backdrop, which is causing all sorts of issues. We've had another gas line pipe stoppage this week, allegedly again for further maintenance, but most of Europe not convinced that that is the case. And of course, on top of that, and driven somewhat by that, we have these extremely high energy prices looming over us in the UK and in most of Europe. There's some sentiment which suggests the Bank of England may not continue its steep, sharp interest rate increases, although we did see a little bit of activity earlier in the week which suggested, more and more likely for another sizable increase. So why this sudden contradiction? Well, a lot of commentators are suggesting that this increase in interest rates, or these steep increase in interest rates at least, could well be dampened down a little bit to ensure that the cost of energy crisis, the potential problems, the cost of living of winter of this year, this will be used to try and lessen the blow for the average person in the UK. Levels of uncertainty and unpredictability at the moment in the FX markets, especially in the pound and the euro, are at levels basically we haven't seen for quite a long time. And it's interesting, and a real diversion from 2 decades of what now really looks like non-moving currency markets, despite being the most heavily traded, the most liquid markets in the world. So is there a little bit of hope for GBP? Well, depends which side of the fence you're sitting at the moment, but there does seem to be a little bit of momentum gathering for a slowdown in interest rates, maybe a control of inflation using different methods, which could well help support the Great British Pound. Take all of these factors and many more into account with your trading, and wish you luck for the upcoming week. Many thanks.